and welcome to Business Daily. I'm Iji-yoon in Seoul. Before we get started, let's first get a quick check of today's highlights. Korea jumps 4 notches to rank 23rd in the world in terms of economic freedom, but still seems to be in need of improved overall efficiency and flexibility. Korea's state-run banks struggled with losses last year while commercial banks enjoyed a boost in interest profits. And experts say this could end up being a burden on the Korean people. We'll sit down with an expert to talk about this. The Korean government will strengthen policy efforts to boost domestic consumption, investment and exports, and tackle rising risks at home and abroad. Speaking at the third economy-related ministers' meeting on Thursday, Finance Minister Yoo Il-ho said the Korean economy is losing vitality due to uncertainties stemming from the Trump administration's protectionist trade policies, political turmoil in Europe, and North Korea's provocations. The minister also expressed concerns over the worsening job market, citing a slow rise in employment and sluggish growth in the manufacturing sector. On a more positive note, Minister Yoo said he expects the country's outbound shipments to extend an upward trend in February, making it the 4th consecutive month of gains on year. A U.S. think tank report shows that Korea went up the ranks of economic freedom this year, but it warns that Korea is at a crossroads in spite of its relatively stable economic conditions. Our Park Ji-won has this report.
The U.S.-based Heritage Foundation has ranked South Korea 23rd out of 180 countries on its 2017 Index of Economic Freedom. The ranking is 4 spots higher than last year. The think tank says South Korea maintains its track record of macroeconomic stability, but its growth momentum is becoming increasingly subdued in the absence of decisive policy reforms needed to improve overall efficiency and flexibility. The top 5 countries on the index, Hong Kong, Singapore, New Zealand, Switzerland, and Australia, are all praised for having high degrees of economic resilience and high-quality legal frameworks. Other major economic powers like United Kingdom and the United States ranked 12th and 17th respectively. The Heritage Foundation said the U.S. slipped to its lowest level in the world rankings due to massive budget deficits, the substantial expansion in the size of the U.S. government, as well as increased regulatory and tax burdens across numerous sectors. China and Russia, while much lower on the list, have risen to their highest ever scores. North Korea remains the most repressive country in terms of economic freedom and placed rock bottom of the list. The Freedom Index is determined by reviewing diverse factors of a country such as investment and fiscal freedom, government spending, and property rights. Park Ji-won, Business Daily.
Now on to the latest developments on the foot and mouth disease that is taking a toll on cattle farmers and related industries. No new cases have been reported since Monday this week, but after the massive bird flu outbreak, farmers and consumers are still worried. And our Shin Se-min takes us to the first area hit by the outbreak.
A mass burial of cows affected by the foot and mouth disease takes place beside a local cattle farm. Many of the farms in the neighborhood have already emptied out.
It's been little over a week since the first foot and mouth disease was confirmed here in Poeung County, Chungcheongbuk-do province. But already a number of farms like this one right here have cleared their livestock in a bid to stop the spread of the virus.
In just 10 days since the first outbreak, over 1,400 cattle have been culled at 9 different farms. Of that, 70% or 986 cattle are from Poeung County, which has high concentration of livestock farms. What began with the type O strain of the disease at a dairy farm was then followed by the type A strain at a different location, forcing the country to push up the disease alert status to the highest. The amount of compensation for culled cattle is expected to reach over $7.4 million. And this nightmare for farmers is directly hitting related businesses. With the circulation of meat at a virtual standstill, our inventory has nosedived and the prices have gone up, deterring more customers. It doesn't help consumers who are shopping for groceries, not to mention vendors who have no choice but to sell at higher prices. Korea Institute for Animal Product Quality Evaluation says that the price for homegrown beef is steadily rising. A kilogram of top sirloin meat had a price tag of 76,236 Korean won, or $66.79 at the beginning of the month. As of Monday, just about a week after the outbreak, that had inched up to $69.10. The rise in prices added to already weak spending is only expected to further hurt domestic consumption.
Regardless of whether it's the largest outbreak in livestock or not, consumer sentiment will be hurt, especially when the outbreak has to do with everyday groceries like meat, chicken, and eggs. And that sort of perception stays with people for a good amount of time.
Just how long the effects will persist is yet unknown, but hopes are conditions will quickly pick up to help households, vendors, and farmers, especially as the country is just beginning to recover from one of the worst bird flu outbreaks. Shin Se-min, Business Daily.
A system introduced 2 years ago allowing Koreans with foreign nationalities to get citizen ID cards while living here in Korea has surged in popularity. According to the Ministry of the Interior, as of the end of last year, nearly 46,000 people had registered for an ID since the system was first introduced in early 2015. It allows overseas Koreans living here in the country longer than 30 days to get identification that works just like that used by local citizens to reduce the difficulties that they face in routine business, like dealing with banks or the government. It's also meant to give them a stronger connection to Korean society. And ministry data also shows that 70% of these foreign nationals of Korean origin were living here in Seoul or the surrounding Gyeonggi-do province. As more people make direct purchases from overseas sources, there's also an increase in the number of credit card data thefts. And while related authorities are watching for criminal behavior, it's incumbent on the consumer to be vigilant. Our Eunice Kim has more.
Buying overseas goods directly via the internet is a trend now that not only touches the younger demographic, but also those middle-aged and older. In dollar terms, such sales crossed the $1.4 billion threshold in 2014. Over 2 years, it jumped nearly 19%, recording more than 17 million transactions last year, worth some $1.66 billion. And as more people turn to the internet for a better deal, so are criminals looking to make a pretty buck by stealing credit card information. According to the Financial Supervisory Service, unauthorized overseas credit card transactions in the first half of last year exceeded 7,000, worth a combined $6.7 million. And the techniques are many, from the so-called farming, which tricks users to submit their credit card data on a counterfeit website, to a straight hack job. While the government has run a system that detects irregular online transactions since 1997, it is designed to be more effective on large transactions and not so much on smaller sales, which is why it's important for consumers to be vigilant when online. Don't input credit card data on the site that has not been security verified. If possible, request an overseas payment blocking service on your domestic card. Also, use the text message service on transactions so you'll know when an unauthorized sale went through. In case of data theft, make sure to contact your bank or credit card company immediately. Locate evidence of the transaction and begin the dispute process within 120 days to claim your refund. Eunice Kim, Business Daily.
Corporate restructuring efforts within Korea's shipbuilding and shipping industries were expected to take a toll on banks last year. But it seems now that Korea's state-run banks and commercial banks are walking down two very different roads. Take a look.
Korea's major banking groups all showed robust performance last year thanks to increased lending, reduced costs in risk management, as well as stronger performance by their non-banking units. According to data by financial information provider FN Guide, combined annual net profits at financial groups Shinhan, KB, Hana, as well as Uribank hit an estimated $6.27 billion last year, up nearly $1.2 billion from 2015. Experts say much of this stems from an increase in deposits, as well as profits from interest made off of SME loans and household lending. But things are quite different for Korea's state-run banks. The Export-Import Bank of Korea reported a net loss of 1 trillion won or $875 million last year, the first since it was established 40 years ago. The tumble is attributed to the massive loans it extended to prop up the struggling Daewoo Shipbuilding and Marine Engineering. Korea Development Bank also recorded a loss last year, hit hard by the court receivership of STX Offshore and Shipbuilding. The growing chasm between the performance of commercial and state-run banks has become a greater source of concern, especially as it could have implications for taxpayers down the line.
And to tell us more about this, Professor Kim Se-won from Ewha Women's University joins us in the studio today. So good to see you.
Pleasure to be here.
All right, so Korea's financial groups saw their interest profits rise last year from the year before, despite the ongoing corporate restructuring drive as well as low interest rates. So what's the reason behind this?
Well, the four major commercial banks, Shinhan, Uri, KB, combined interest profit surged last year up to 18 trillion won level from previous year's 17 trillion won.
Wow.
And this is mostly due to increased household loans. But actually, this increased profit has been generated from housing market boom, which is also generated from Korean government for the last 2 years. But the actual shape of the banking industry is gloomy. Firstly, international banking industry is declining due to fintechs and thin margins because of the low interest rate. And the last year, Korean commercial banks laid off over 5,000 workers.
Now, but then at this point, I'm wondering, who would you say is the greatest beneficiary of this better performance?
Well, if we talk about the increased profit of the commercial banks, we have two sides, bright side and dark side.
Okay.
And it is good for commercial banks, of course. But if we talk about the dark side, there are two major issues. Firstly, as I said, this increased profit has been generated from a housing market boom, which is not sustainable. So when the housing market boom burst in the end, that risk spreads to commercial banks quickly. And secondly, Korean commercial banks are mostly owned by foreigners. So increased profit will be paid to foreign investors in the end.
And like we heard in the report, Korea's state-run banks all reported losses last year. So what led to such losses?
Well, there are two major public banks, KDB and Export and Import Banks of Korea. And they had huge losses last year, up to 100 billion Korean wons. But these two banks are major arms and foots of the governments in Korean financial market. And this is why Korean government is still owning and manipulating these two public banks. So when government wants them to provide cash to problematic companies, they have to do it without pursuing the profit of their companies.
And like you said, state-run banks are financially burdened due to the ongoing corporate restructuring. And many say that the fact that commercial banks not sharing this burden is actually making things worse. So what are your thoughts on this?
Well, if we take a look at history of the public banks, they were built up in 1960s when Korea was one of the poorest countries in the world. So they have special reasons for building up these special banks, providing long-term loans to systematically important companies. But as Korea became a major economic force these days, all the commercial banks like Shinhan, KB all provide these special loans to big and important companies. So these days, there's no difference in public banks and commercial banks' businesses. So the responsibility and the burden of industry reconstruction should be shared fairly between public banks and commercial banks.
And also some are saying that this could all result in a bigger burden for the Korean people. I mean, what are your thoughts on this?
Well, Jian, do you have accounts at KDB or Export and Import banks?
No, I do not.
Neither do I. So not many people have accounts at these specialized or public banks. So we might think that these public banks are far away from general public, but these public banks' business are sustained from governments. So the way of finance their loan is selling the bonds. And these bonds are guaranteed by Korean governments. That means when they have financial problems and structural problems, Korean banks, a Bank of Korea or central banks or Korean government should be inject tax from the people.
Now, this week, some banks did say that they will work to restore letter of credit and operational fund limits for debt-laden Daewoo shipbuilding to 2015 levels. So, but with more restructuring to come, what role do you think the two sides should play to make sure that this process goes smoothly and more effectively?
Well, that's a really tough question because we do not have a substitute for public banks like KDB and Export-Import Bank in the short run for clearing out a difficult situation of the Korean financial market. But in the long run, these public banks should be privatized to improve the competitiveness of the Korean financial market. So after that, these bailing out programs and reconstruction of the industry should be led by privatized banks and privatized commercial banks in the end.
So let's hope to see more moves down that direction.
Exactly.
Thank you so much for coming in today.
Thank you very much.
And that wraps it up for today. Thanks for watching. We'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.